Everyone is asking the same question in 2026. Where will Australian property prices grow next? A new research report has analysed 14 major markets across Australia using 6 forward-looking indicators to identify the cities most likely to outperform. And the results may actually surprise you. Hi, I'm Ankit from Value Nest Buyers Agency, and I specialize in research-led property investment strategies. I help property investors make confident, data-driven decisions by focusing on numbers and fundamentals and not the headlines. In this video, we will uncover the growth leaders in 2026 and how you can be ahead of the herd. Now, when we do the research, we focus on 6 key metrics. The report does not rely on past price growth. Instead, it looks at these 6 indicators that usually predict the future price rises. Now, what are these indicators? First one is sales volumes, vacancy rates, rental growth, infrastructure spending, days on market, and percentage of homes selling above the asking price. These metrics show buyer demand, supply pressure, and economic activity, which are the real drivers for property growth, not the headlines that we hear around us. Now, based on these 6 indicators, this report has ranked Australia's strongest property market for 2026, and the top jurisdictions are Brisbane. Brisbane has been ranked number 1. Number 2 is Hobart, then comes regional Tasmania, followed by Adelaide, Perth, Darwin, and regional Queensland. Now, this suggests that growth is not limited to the biggest cities like Sydney and Melbourne anymore. In fact, some of the strongest markets here are smaller cities and regional areas as well, just like regional Tasmania. Now let's get into it. Why Brisbane has been ranked number 1 first of all. Brisbane has been considered as the strongest property market in Australia for 2026, and this has been the case for quite a few years now. And this is not because it dominates just one metric, but because it outperforms strongly across all the 6 indicators which I mentioned above. 71% of Brisbane markets show positive sales activity, 86% of the suburbs sell within 40 days, and over 240 billion worth of infrastructure projects are ongoing in Brisbane at the moment. This level of infrastructure spending supports population growth, jobs, and housing demand as well. Number 2 is Hobart, and this ranking has been done nationally. So what makes Hobart interesting is that it hasn't seen a strong growth market recently, but now the data suggests that it is entering into a new growth cycle, and this has been happening for almost 6 months now. The city ranks very strongly because of the sales activity. Homes are selling above the asking price and the vacancy rates, and it also has very strong rentals. This combination usually indicates stronger buyer demand and limited supply. Now, the most surprising market was regional Tasmania, which has been ranked number 3. Now, this is actually one of the biggest surprises in the report and has been ranked 3rd nationally. This region performs strongly across 5 of the 6 key metrics which we analyzed, and the key drivers here include strong rental growth, which is more than 7% every year, extremely low vacancy rates, and rising investor demand. Markets such as Launceston, Devonport, and Burnie are gaining attention from the investors. Now, we've discussed about these 3 suburbs, and there are a few more which have been ranked globally. But what is the most common factors in these? First one is the median price, which is very affordable, around 550k to 775k. The vacancy rates in all these areas is below 1.1%. Rental growth is around 7%, and 50% of the properties in these markets are selling above the asking price. Some examples are Zilmere in Brisbane, Deception Bay, Claremont, and Mount Lawley in the areas like Perth. Now, what is the biggest takeaway from this research? Property growth is not just about interest rates. We have been seeing few interest rate cuts and few interest rate hikes, but markets actually outperform when they combine strong buyer demand, low housing supply, rising rents, and economic investment. That's why cities like Brisbane, Hobart, and Adelaide are positioned for growth in 2026 despite the interest rate hikes. We have seen already 2 interest rate hikes, and there's a lot of uncertainty around the world. Smart investors don't chase yesterday's winners. They look for markets where demand is rising before price move. And according to this data, the next growth wave may come from smaller cities and overlooked regional markets. Now, if you want to stay ahead in property investing, follow the data, not the headlines. Thank you for watching the video. See you in the next one.